Core and Explore portfolios involve having two different investment strategies in one portfolio. The Core strategy makes up the bulk of the portfolio, and the Explore strategy is a small portion. For example, if you had a $100,000 portfolio for long-term investing, you might have 90% or $90,000 as your core and 10% or $10,000 as your Explore. These numbers aren't hard and fast. Some might prefer to have a small core, and maybe their split is 75% core and 25% Explore. It's worth pointing out that you don't even need to have any Explore if you don't want to. Many investors use one particular investment strategy for their entire portfolio. But let's take a look at some example Core and Explore portfolios that are not uncommon. In this example portfolio, currently with a value of $100,000, we see $80,000 or 80% is allocated to an asset allocation ETF. The remaining Explore part of the portfolio, 20% or $20,000, is equally divided into 10 individual stocks that the investor is particularly interested in. If we take a look at the overall asset allocation, we see that because 80% of the portfolio is in an ETF that has an 80% equity and 20% fixed income split, that portion of the portfolio has $80,000 times 80%, which equals $64,000 in equities, and $80,000 times 20%, which equals $16,000 in fixed income. The remaining 20%, or $20,000, that is invested in the stock picks is all equity, so we add another $20,000 to the equities total. This gives us $84,000 in stocks overall and $16,000 in fixed income. The overall asset allocation is 84% equities and 16% fixed income, making this an aggressive portfolio in terms of risk. Here's another example of a Core and Explore portfolio. In this case, $75,000 or 75% of the portfolio is invested in high dividend paying stocks from Canada and the US. The Explore part of this portfolio, 25% or $25,000, is invested in exchange-traded index funds for exposure to non-North American equities from around the world. Because this portfolio is entirely invested in stocks, it is 100% equity and quite aggressive. And here's one more example for a more conservative investor. They have 75% of their portfolio in a conservative asset allocation ETF. This ETF has a 40% exposure to equities and 60% exposure to fixed income. The remaining 25%, or $25,000 of the portfolio, is invested in individual stocks. To figure out the overall asset allocation, we take the 75% core, which is $75,000, and multiply by 40% to get $30,000 in equities. And we multiply by 60% to get a $45,000 allocation to fixed income. We add in the $25,000 Explore portion, which is all in equities, for a total equity allocation of $55,000. The total asset allocation split is 55% equity and 45% fixed income. This is a balanced portfolio that would have less risk and long-term return potential than the previous two sample portfolios.